Market conditions majority bullish, 14 and 0 on S&P 500 on the daily as well as the weekly. We're seeing futures down 0.09 this morning. We also saw a nice spike yesterday. We saw a breakout yesterday. We're connected now to that swing high from yesterday. Also seeing an 18% pop in that breadth indicator we've been talking about. We talked about yesterday in the last couple of days, which is going to take place. Are we going to get the ones that are leading falling to the downside, or are we going to get the ones that are lagging starting to participate again? So that's part of what happened yesterday is the laggards jump back on board. So you're getting, pretty big percentage. What was that? Yesterday we were down at 50, so about a 10% move. So 10% of those stocks bump back up above their 50-day moving average. So you're getting a little bit more confirmation. This was compressed and negative and down to majority bearish, but now we've ticked back up. That can happen on big swing days like that when we're compressed as the decision is being made. What trend direction are we ultimately going? So a good bullish direction that could add to the case of a little bit more of a melt up type of scenario. Now that we've had a breakout, you get some FOMO, you get additional money coming in back into the market, you get institutions pulling the trigger based on their perspective of interest rates and inflation and all of the big macro conditions here as well. We'll see if how that pans out here over the next few days. We're seeing VIX still below 15, 1477, and majority bearish in its overall downtrend here. We're not seeing much volatility in the last couple of months as we've just been compressing this new base up in this upper range and then starting to kind of fan that back out a little bit here as well. That is also a risk level that we have a really expanded trend at this point, but that can stay expanded for quite some time. You see here was expanded before we really had that retracement, and so once unless we really get some kind of odd outlier news item, markets have digested a lot of the information that is known or even anticipated. That's the value of analyzing the data alone. The price data is all information that is anticipated, that's known or anticipated, is priced in. If all players have bet, okay, if they're waiting on the sidelines and they've yet to make a bet, it's obviously not going to show up in the price activity. But if they've placed their bets, then we have all information known and anticipated priced into the market. It's when we get something that's not anticipated that the market has to reprice, and that can take us higher, that can take us lower. It's those unknown factors that ultimately create the biggest risk factor. S&P 500 closed out at 14 and 0 yesterday. Dow Jones Industrial Average had a really nice confirmation bar, continuing that breakout pattern here. New all-time highs for the Dow. Triple Qs seeing that as well, all-time highs, and working on continuation of this breakout pattern. Gone from compression here in tech on the upper end of that trend, starting to break out now. Russell 2000, these are your small cap names. Good confirmation there as well. So we saw good follow through on small caps and good follow through on Dow stocks, which are typically your large mega caps. They've kind of been lagging, at least they were lagging going into August, and they've kind of been leading us through this move now and pulling the market higher with it. So Russell 2000, that's a good again, another bullish case when you're getting small cap participation. Oil giving some volatility here, still playing inside of that 38250 range, may retest that 72 range on a pullback, majority bearish on oil. Gold getting a little bit of a pause here finally in the last couple of days, 382 or 236 all the way back to 320 for gold. It's this run. We'll see how much further we can go without a retracement. That's a good solid breakout. We've talked about this before. We talk about it every morning, and that is when is this going to retrace, and is there enough demand, and where is that demand going to come from to push things higher? 2-year Treasury, we're seeing that accelerate to the downside. As far as rates, this is sitting at 356. Yesterday, we've gone to majority bearish on the weekly time frame here. If I squeeze that in, You can see where we came from to the swing high point, retracing to the to a 382 level, and majority bearish there as well. So we'll see if rates continue to slide on the 2-year, the 10-year, same story. We saw that compression. Here's a good example of compression of trend as it's expanding and fanning out. That fanning process is, like an aircraft carrier. It doesn't turn very quickly unless you get some kind of major. This was the whole tariff scenario back here where you had rates just all over the place. That's pretty abnormal. What is normal is for compression and expansion of trend. At some point, it's going to be really wide, and it's going to maybe retest this 380, 390 range. We're at 406 currently. If we look at this chart here, 390 is our 236 momentum zone. We'll see if that holds up here as well. So that could be a draw for more interest rates to the downside on that 10-year. Is this 390 range. We'll see what we get over the next few weeks. A couple of stocks to consider today. We've seen HOV in the home building space, good confirmation bar. Got quite a few names in there today, 60 names showing up. CENX, nice confirmation bar here as well. Good move higher, increased volume, back in momentum, and RCAT. This was not quite in momentum, but this has been a name that in the drone space that's been kind of a high flyer and pretty volatile. When it moves, it can move aggressively to the upside or the downside. That may be one to consider there as well with big volume, big confirmation. See if we can get some follow through on RCAT today. That'll do it for today's update. Everyone have a fantastic day today.